Welcome back to the Discovering Commercial Real Estate podcast. Our guest today is principal and co-founder of Hildreth Advisors, David Shorenstein. David, it's a pleasure having you on. Thank you again for doing this.
Pleasure to be here.
Before we talk business, tell the audience a little bit about yourself. So where are you from and why did you get into commercial real estate?
I grew up in Manhattan on the Upper East Side, in a rent-regulated apartment, in a rent-regulated building, obviously, and actually learned about real estate through living through a rent-regulated building, what it was like to get approached to be bought out, what it was like for the landlord to investigate my parents or myself as actually living in the apartment, or how much money they were making every year, make sure they were conforming with the rules. So I didn't even know that was the whole point of what someone actually hired me to do at a young age, was to look into voter registrations of the tenants of the building, of where people lived. So that really was probably my first exposure into real estate. You know, I didn't have any immediate family in the business. But went to NYU Stern for undergraduate, and got a degree in finance. And there was one real estate class for undergraduates, learning about modeling, valuation. I really just loved the professor, what he was talking about, and then just once I was graduating, it was really I thought I was more bred for like a sales role in my life, and I knew a lot of salespeople made a lot of money, because I always wanted to make a lot of money, not growing up with a lot of money. So that really led me towards real estate or sales. It was either pharmaceutical sales or real estate sales, because I probably wasn't going to get one of the big investment banking jobs, which if there were 400 graduates my year, there were maybe 30 or 40 investment banking jobs. There was only really one big-time real estate job at the time, which went to a friend of mine that grew up in the business. So that's when I started in the business, working for a landlord, making very little money.
And so what do you think you'd be doing career-wise if not commercial real estate?
I'd probably be doing something in the sales world.
So
whether
sales.
I don't know if it would have been pharmaceutical sales, but it could have been. At the time there was still stock brokerage. Maybe I would have gotten into sales and trading, or I'm sure I would have ended up starting some sort of some business.
Got it. And so after graduating from NYU Stern in 2003, you had a certain skill set in finance. So walk us through how you apply this skill set to your career today.
I mean, the skill set in finance, a lot of the skills are used. Just being very quick and good with numbers, basic numbers, knowing how to read spreadsheets, knowing how to, value things based on return. Those are a lot of the similar skill sets.
Understood.
Quick thinking math skills.
Okay. And I want to understand where you first developed your sense of business. So if you had to think back to the first time you remember selling something, what comes to mind?
I remember when I was probably about 10 years old selling candy on the school bus.
Okay.
And I remember selling someone a few pieces of candy for like $20. And $20 was like a lot of money to like a 10-year-old at the time. So I remember that and getting in trouble for that. But I was always a collector. I always collected autographs. I collected sports memorabilia. I collected comic books, baseball cards. I would always be trading cards. So that, I think that gave me also the mindset of today. I collect buildings and collect art. So I just keep collecting, and I collect memorabilia. So that passion for collecting things at a young age gave me the passion for collecting.
Amazing. Okay, understood. And I watched an interview where you said that you taught yourself the real estate business towards the tail end of college. So how did you go about this, and what resources like the Massey Knuckle setups did you use?
So when I graduated, there were some big brokerages, and what they would do is they would put the setups online of all the properties they were selling. So there was a lot of information out there. This is when the internet, I guess, started getting very, very big. And I would just look at these setups over and over and why these buildings were worth what they were worth, different locations, what the rents people are paying. So really just looking at all these deals over and over and over. And I would even call these brokers and probably ask the most ridiculous questions.
Right.
I didn't know what I was talking about, but I was just trying to slap things together.
Right.
Trying to sell it to friends in college, like say, here, look at this building, look at this building. I had no idea what I was doing.
Right.
So really just looking at these things over and over and reading.
Right.
I still read a tremendous amount. And that's how I taught it to myself.
Right. So you would read these as a perspective of a buyer to better understand what a buyer would be looking for. And you would call these people to see, in the case that where I would be a buyer, what questions would I ask?
Right, exactly. Or I would try to take the setup and show it to my friend thinking he would just buy this when he said, my family owns buildings. And I would think this is easy. I just show him this and then he'll buy it and then I'll get paid half the commission. It's never that easy.
Right.
That never worked.
Okay. And what was your first deal that you closed as an investment sales broker?
I remember it was 2201 Amsterdam Avenue. I was fortunate when I left working for this landlord. I got fired after a month because I wanted to put deals together.
Okay.
I started working for another brokerage where the senior person who ran the division saw something in me as a 22, 23-year-old and knew I was obviously very industrious, smart, hardworking. Basically put me on a listing that his family friend wanted to sell this building. And we had no idea what he was doing because even him, he was 10 years older. He never sold the building before.
Okay.
I never sold the building before. So at the end of the day, I came up with an idea since I didn't know how to find buyers at that time, was call up another brokerage, and that's how I sold it.
Understood. Got it.
So I ended up selling it, but not finding the buyer.
Okay.
But we still got paid. I don't know. It was probably a couple $100,000. He probably gave me like $50,000. And at that time of my life, that was
23 years old. It's great.
22, 23 years old. So a lot of money.
Great.
It was a great accomplishment.
And what have you learned about yourself since you've closed your first deal?
In the last 20 years?
Yeah.
It's the same type of skill sets that I was doing back then. They used to call me the hurricane and just high energy, never give up attitude, just keep pounding away at certain things.
Amazing.
Being that nudgy person.
Okay, great. And so walk us through the mission of Hildreth. What's your long-term vision for this company?
Hildreth, in the last 4 years, I mean, we've grown tremendously. We're probably over 200 million in assets right now. We started with 0 assets in 2018. Now we're getting into a bunch of different verticals. We're a debt platform, growing the Opportunity Zone platform, which we became the largest owner in downtown Riverhead, which is all through Opportunity Zones, operating businesses, laundromats,
Great.
Other growth. We're in Los Angeles. We bought a few buildings. And now we're working on our first deal in Florida, which I always say, like, we're the last people to make money in Florida, but we're finally getting there.
Yeah.
And we keep growing. We're in the marina business. We're closing on our first marina for $14 million in Montauk. And we just secured another contract to buy another marina. So we're going to try to build out a very big marina business as well. So we've got our hands in a lot of different pots.
That's very interesting. And so for each different pot that you kind of have, do you have different investors that are kind of tailored with their skill sets, or do you have a general group that you do everything with?
There's some crossover, but there's a certain set of investors we have that like our cash flowing shopping centers.
Right.
Then we have our Opportunity Zone fund investors that like the tax treatment, and then marina investors are a completely separate type of investor.
Got it. So you match each investor with what their preferences.
Right.
Got it.
And then we have New York City. We did a New York City fund in 2019. We bought 9 buildings. So those are different investors. And when we do, we're still trying to do New York City. It's very hard right now. That's why we're in all these other areas. That's probably a different group of investor.
Understood. And how can someone, let's say they just graduated college, how can they make a name for themselves if they don't have a track record?
Well, usually if they don't have a track record, most people can't go out and start buying. They're
Right.
going to have to work as an acquisitions person. So right now I have 8 acquisitions people that all are work for Hildreth, working in the different submarkets, and they all are making names for themselves in the acquisition world.
Right.
And usually after the first few deals, they either want to come into the deal somehow and learn from the operations side, or we give them some upside in the deal. So that's really the way as a young person to build your equity is working at a firm, hustling, bringing in deals,
Right.
and building your equity that way. And then if you get to a certain point of being able to bring in outside capital, then you can really bring value to the organization by doing that. So then the organization can grow.
Understood. So starting out, you really should go under somebody else's wing who knows what they're doing and can guide you through what
Whether that's brokerage, learning the business that way, which I think people should do even before going to acquisitions.
Right.
Try to do the brokerage thing. Right now, I think most brokerages are contracting.
Right.
There's not as many deals going around, so you got to find the right situation.
Right. So you would say the ideal path to getting to that point of being an asset manager is to start off brokering, then go into acquisitions, then go into starting your own company.
Right. And a lot of people can't go into brokering because there's no salary from day one. So
Yeah.
they have to go into acquisitions.
Yeah.
So they can either get a salary or some sort of hybrid.
Right.
And learn the business. One of the 2 ways to learn the business.
Understood.
You know.
And as far as institutional capital, how do you kind of attract and partner with institutional capital?
We only work with a couple of quasi institutional capitals, but it goes through hundreds of phone calls of finding the right people and constant dialing for dollars and pitches and bringing in partners to bring in the institutional capital. It's constant merry-go-round of keep searching, keep grinding. So there's no easy answer.
And so what do they look for that private investors often don't look for?
Well, they're all looking for the same thing. And what we do is, most of our deals are off market.
Right.
We have our own platform. We have about 100,000 properties in our database that we're actively canvassing for. So the deals that we do usually are deals that are below market or not known about. So I think that's a good story. That's why people want to invest with us. We have a lot of repeat investors. We have people that do want to invest. Sometimes it's just like the terms don't make sense for us because they won't let us make enough money.
Right. So you position to the institutional investors that you're kind of like an industry leader with access to off-market opportunities.
Yes. And, we have the track record.
Right.
We have an audited track record that supports it. We've had a number of good sales over the last few years of things that we bought and then repositioned, sold. So between the track record, other partners we worked with, other investors that have been extremely happy.
Right.
We have reports written on our company from law firms, due diligence reports. So we're it's very buttoned up.
Amazing. And so, what do you look for in an ideal capital partner with your investments?
Ideal capital partner, people that will just understand what we're doing, understand the value that we're bringing, understand, we're not going to be able to sell the building in a day and make money, at least in this environment.
Right.
Understand if we have to put more money in, that these things happen. So, just people that want to grow.
Right.
People. We don't want to look for people that were just going to do one. Like I said, most of our partners now are all repeat. They're very happy and they tell others.
Great, amazing. And how did you leverage rejection from your first few deals to kind of like reevaluate your strategy for the deals moving forward?
I mean, it's just the never give up mentality. I mean, there's deals you lose deals. People say they don't invest. You can't take it personally.
Right.
It's not about you as an individual. It's just something could be going on in their life at the time.
Right.
But look, at the end of the day, if you sign the contract and you're hard, you got to close the deal. So you're gonna have to find it.
Right.
So you're gonna have to keep going until you get it. Otherwise, you're just gonna lose your deposit.
Right. Yeah. Keep pushing. Yeah.
Which is never. Luckily, it's never happened to me.
Great. And let's say somebody watching this right now works in acquisitions. What are some aspects of the building that needs to be understood beyond the numbers?
Something that I've learned. Obviously, nothing always goes perfect, but you got to really go into the building,
Right.
And try to look behind the walls if possible,
Right.
because that's where cost overruns can happen. And you might put one number down on paper, but might go up 30, 40% during
Right.
construction. Talk to experts. That's something I've also learned. Bring in more experts in every aspect of the process of buying a building.
Understood. And so the numbers are not really everything. Like there are certain things that you need a person to go in and inspect.
Absolutely. That's something I learned over buying hundreds of buildings. Get in there and get your hands dirty in there.
Okay, great. And I read a blog on your website where you mentioned that the key to succeeding in this day and age is to find the right networking avenues. My question to you is, how do you maintain these relationships and stay top of mind with people without being pushy?
The thing I'm doing, that's something I think that separates me than most others. I'm always networking.
Okay.
I'm always meeting more people. I'm
Right.
always asking for people to introduce me to other people. So my network just keeps growing and growing and growing. And which is something that I want to get more of that you're doing, is social media,
Right.
staying top of mind. I'm constantly adding to my email list, and
Great.
I'm sending things out on a constant basis. And I'm going through my list of people who to contact for certain investments. It's just hard work.
Right.
A lot of hard work.
Would you say this business is like 80% relationship management and acquisition of relationships?
Well, that's why I also have a lot of acquisitions guys.
Right.
That's, you can't be doing everything.
Right.
So they are really in charge of acquisitions. I do some of it myself.
Right.
But then I would say my role as the owner or co-owner of the company is relationship management.
Got it.
At the end of the day.
Okay. And as far as when you buy a building, what are some value add strategies that you employ that may be seen as unconventional or out of the box?
Unconventional or out of the box. Let's see. It could be, once you sign the contract, trying to see what this thing is, see what the property is really worth out
Right.
there, talking to brokers, what could be sold for quickly,
Right.
trying to get tenants in there before you close. I've signed, when I did the New York City fund, I was able to sign a number of retail leases before closing. Then your financing is able to
Okay.
improve. Unconventional things. A lot of things are, I would say, standard, or working on lowering your taxes. I'm always working on figuring out how to lower taxes, whether it's in Long Island or here.
Okay. Great. Amazing. And as far as Proptech, what Proptech services do you use that you would recommend to other principals or other brokers?
Sure. Appfolio, I think, is a must. It's incredible for property management and oversight of budgeting and how to pay bills.
Yep.
It's incredible. DealPath. I mean, if you're doing multiple closings and deals at a time, which
Right.
we're usually signing 3 to 4 contracts a month now. At least this month, we're probably going to sign 6.
Okay.
Keeping all that flowing, getting the deals closed in a timely fashion. So DealPath, CoStar, obviously, for
Right.
reporting, investor reporting software like an IMS or Juniper Square. We use IMS. So if you have a lot of investors, we probably have right now, it could be over 200 investors. Some of them small checks, big checks, having it list their equity percentages, them to access their K1s, their documents.
Great.
Having that is a game changer.
Wow,
If you have a
okay.
lot of investors, you need that.
Yeah. And what do you see? What do you see is not what is a gap that's not being filled by any Proptech company right now that you kind of see potential for?
I mean, I think I want to learn more about the construction, but now I have a full-time construction manager. So we're talking about which services to use. And I know I've read there's a bunch of them out there right
there's a
now.
couple.
But I haven't really seen any other gaps lately. I think I've been using a bunch. I've used some and then I've stopped using some. But I'm happy with what we have right now.
Okay, great. And how do you go about setting goals for yourself and for your company?
Well, I had all the acquisitions guys just put together their goals for the year.
Okay.
It's hard to stick to these goals because you go on vacation, things happen, then you get busy with active deals, so then you kind of fall off the canvassing platform. But goals we set out this year as a company was really grow the marina business. That's something that is unique, very hot sector right now. We've gotten into self-storage business. We're building 2 of them. We own one. So we got into that hot sector just as it's like Now it's cooling off a little
Right.
bit. I mean, it's still opportunity. Goal is to really buy the first 2 or 3 buildings in Florida this year. So we have goals, and usually we end up achieving.
Great. Amazing. Okay. And how do you make money in a down market?
How do you make money in a down market? You could flip contracts in a down market.
Okay.
Which is signing your option on a contract for more. So
Right.
that can happen. You really got to work that much harder to find that one special deal that someone's going to pay more than what you're paying for, especially when you're flipping.
Right.
In the down market, you really also got to focus on the stuff that you do own and maximize what you do have. So that's a way you can make money, is try to squeeze more rent, or work on your entitlements more, or work on lowering the taxes, cutting the expenses, maybe looking at switching insurance.
Right.
Really, instead of saying, oh, I'm going to go buy more, obviously everyone wants to buy more, and this is probably going to be a great time to buy. It was very slow for 4 months, but now it's really picking back up, is to work on lowering your expenses. And that's what we did for the last few months, was working on lowering expenses operationally. Maybe trying to hire staff that have been let go from other places. That's why you can make money, is finding great talent for cheaper, which we've done.
Amazing. And as far as flipping contracts, how important is it to have a good, kind of reliable lawyer that you can bring to these closing tables?
You need great lawyers, obviously. My business partner's father runs a major law firm, so we have lawyers at our disposal, which is a tremendous also advantage that I have.
Okay.
From corporate, real estate, everything. But, working with a bunch of different lawyers, and a lot of it's going to be trial and error.
Yeah, definitely. And as far as your investment strategy, how would you describe it changing over the years?
Well, really, I started buying a lot of rent-regulated buildings, and that was the best business to be in, where you could take a rent from $500 and get it up to $4,500. So once that business started ending in 2015, 16, 17, I really wanted to focus on cash flow. So I started with the workforce shopping centers in Long Island, and then it morphed into COVID, which I was in the Hamptons.
Right.
So I started buying a lot of commercial buildings in the Hamptons, and that I also bought in Riverhead before that. That led me to the Opportunity Zone. So it's really when one thing shuts down, one thing
opens.
can open.
Yeah,
Right. So
sure.
you got to really be open-minded, because if I just stuck with New York City, even though I bought 9 buildings in New York City between 2019 and 2020, which I think is going to turn out to be a tremendous grand slam, you got to just keep an open mind, and just don't be all over the place.
Right.
Most people can't be all over the place, but
and always keep your eyes open for new opportunities and emerging markets and stuff like that.
emerging markets. Well, because when cities shut down, the whole Long Island became an emerging market.
Right.
So a lot of people were in Westchester. I just can't be in Westchester and Long Island.
Right.
Very hard.
Yeah,
I'm closing on a property in New Jersey next week that just somehow came to my lap. In Livingston, great market. So
Great. And as far as so buying in New York City, which is one of the most competitive real estate markets in the world, how did you, as a principal, stand out to sellers and win a deal?
Closing quickly, doing what you say you're going to do. No contingencies, willing to put up 10% non-refundable on contract. I mean, I couldn't speak to the COVID era. We were one of the few people who had a fund or money set aside to close on these things. We closed on a couple of them cash, and then refied out. So there was only a few people at the table at the time. Now, fast forward, the market, when COVID happened, it crashed. Then it spiked back up. There was a short window to capitalize. And now when the interest rates came back up, now it's crashed again, so to speak. So there's not very little activity.
So do you always have cash set aside for in case something bad goes down, where you can kind of capitalize on that?
Yeah, we have a fund for general partner fund, where we can go out and do a deal and then recapitalize later.
Great.
So we can pretty much buy any building, but right now in New York City, people still want to sell at a 3% return, a 4% return, and you're borrowing at 6 or 6.5, so you're losing money day one. That's why no buildings are selling. So right now, you will stand out. Any buyer will stand out right now if they're interested.
Yeah.
So,
So the prices are really gonna have to come down in the next couple months in New
right,
York City.
which I think they're starting to. So if the buildings were worth 12, 1400, 1500 a foot, now
Right.
you're seeing buildings 1,000, 800.
Right.
I mean, we can't even talk about rent regulated buildings because
Yeah.
those are, there's no value
For
there.
sure, yeah.
No, I don't think anyone's touching that.
And do you ever see for rent regulated buildings the law shifting in the favor of the landlords?
I don't know. I haven't really heard anything.
Okay.
'Cause, I see buildings that were once worth 800, 900 a foot now worth 300 a foot.
Right. Yeah.
If that.
Yeah.
Because they have to sell at 6 caps.
Okay. And as far as sellers that have kind of crazy pricing expectations, how do you bring them down to earth?
Same thing like a broker would. Showing them the comps, showing them the financing. I mean, most sellers know that the rates are at 6%,
Yep.
6, 7%. But it's really the people that are going to sell right now are the people that have to sell.
Right. Yeah.
There are partnership disputes. So
Yeah.
we just signed a deal in the Hamptons. A partnership dispute, another shopping center in Long Island. Partnership dispute, another one's a estate sale, the shopping center. Another one, guy's tired of managing it.
Okay.
Another guy's the marina we're buying, tired of managing it. Everyone has a story.
Yeah. Yeah. Exactly. And so I've seen you've done a good amount of deals in the Hamptons. What would you say people often overlook about the Hamptons, and how are you able to seize good opportunities there?
People, I think, are overlooking the rents they could actually get on some of these things. There's very few buyers out there. I'm actually now friendly with a lot of tenants, and I have a lot of inside market knowledge. Now we own, I don't know, apartment-wise, over 100 something apartments there. So I have inside market data on what you could really charge for the apartments. Most people don't have that many units. They only own 1 or 2 buildings.
Right.
So there's very few buyers there. And coming with the New York City mentality out there and able to move quickly, sign things, do what you say you're going to do, close quickly.
You create like a blue ocean strategy.
Yeah, exactly. So now I get I get bombarded with stuff, even though 99.99% of the stuff is very overpriced and not serious, or people who just bought something want to resell it, or there's no cash flow. So there's very little deal volume. It's like Manhattan. It's so similar.
So you were able to kind of bring your skill sets that you developed in Manhattan to the Hamptons and kind of leverage your experience in that.
Correct. It's very, very similar. It's really an extension of Manhattan at the end of the day, because most, the summer out there is just, that's where everyone is. Exactly. It is Manhattan.
Yeah, definitely. And can you walk us through any of your investments outside of New York? Give us one deal that went really well and one deal that didn't go as planned.
Investments outside of New York, like Los Angeles or whatnot. I bought buildings in Los Angeles in 2017, 2018, and all those were successes, where, you would work tenants and up the rents, and sold all those buildings. And then lately, the ones I just did were shopping centers. One I entitled for development in Los Angeles and sold it for a very big profit. So nothing has really, I would say, not worked outside of New York. Some deals didn't work in New York due to rent regulation and market conditions. So I don't know if you want to, where you want to go with any of that.
And I also want to ask, what's been your biggest missed opportunity within New York City?
Missed opportunity in New York City. There were a few offers, I guess, to take institutional capital maybe earlier on that I should have explored more. But you develop a mindset that you don't really need anyone else. When you're young, you got to learn these lessons. Maybe it's not taking on institutional capital.
Right.
There's always a few deals here or there that you could have made $10 million overnight, but if you didn't have the money anyway, you can't be upset.
Right.
There was a deal recently that I could have bought for 5 that just sold for 10 in Manhattan, but it is what it is. It is what it is.
Yeah.
You can't dance every dance.
Yeah, definitely. And what do you look for in a new hire, a new acquisitions person?
First thing is someone that you can trust, someone you can rely on, someone that's a self-starter. You don't have to just feed them everything what to do. Someone not just going to take their salary and want to work a 9 to 5. Someone that's going to want to build and create something.
And what's an ideal background for someone that you want to hire for your acquisitions team?
They could have worked in brokerage, my top guys now. They all worked at a brokerage.
Okay.
They all had that training. They're young.
Right.
Worked at a brokerage. Had that sense of This is how we find the deal.
Right.
This is how we kind of underwrite. Then we teach them our style of underwriting because my partner came from an institutional background, so he wants to teach them the institutional style of
Right.
underwriting, which everyone learns. So they have to be capable of eventually learning that, which, one of the guys came in, he didn't really know how to work on a spreadsheet. Now he does it at institutional level.
Right. So would you say that the brokerage kind of business and the acquisitions business are pretty much hand in hand? They're the same skill sets?
Very similar skill sets, I would say.
Okay.
I would say the acquisitions is more of an entrepreneurial because you have more free reign to go
Invest in deals.
looking at things. You could take, when you're a broker, you have to broker. They don't really want you buying properties. It's going to be very hard when you're labeled in that brokerage shop.
Right.
When you're an acquisitions person, you're a principal. You can flip the contract. You can broker the deal.
Right.
You can refer the deal to a brokerage firm and make a fee that way with doing no work. You can buy the deal. You can help the firm raise money for the deal and get a piece of the deal.
Yeah.
You can say, I'm going to work on the deal. So there's
so
many more
opportunities.
ways to make money as an acquisitions person as opposed to a broker, which is really one way.
Right. Yeah, exactly. And I watched an interview where you said that when you worked at Marcus Millichap, you also were buying buildings on the side. So how was that kind of affecting your, how were your investments affecting your job kind of?
It was very, very hard, but at the time, which I don't think they allow this past that
Yeah,
time, because
probably
this
not
was 2007,
Yeah.
they allowed myself and my partner at the time to do that.
Yeah.
They knew we were trying to buy buildings and more or less had one foot out the door.
Right.
So, in the brokerage business, that was dead. It was an opportunity to buy. So, it was very unique from that standpoint.
Right.
Now it's either, I think they
Completely different. Yeah.
completely different.
For sure. And when you were coming up in the industry, who were your kind of like your role models and people you looked up to?
Well, when I started, it was really like the big brokerage firms, the Easterns, the Masseys, the Bessons. Those are the people I wanted to be like, the big brokers there,
Right.
the Amit Doshis and the
Paul Massey, Bob Knackle.
Paul Massey, Bob Knackle, guys making millions and millions of dollars a year. And then as I started making my clients money, then there were principals that I just
Started to look up to.
and said that's what I want to be like. And eventually I ended up doing that.
Right. Great. Okay. And I see you've done a whole lot of philanthropy, and you kind of made it your mission to inspire and educate the next generation of young professionals. How important is it to give back as an industry veteran and as a seasoned professional?
I think it's very important. It's very rewarding when a lot of people that were either worked with me in the past
Right.
or they were my interns go on to do, big things.
Yeah.
There's a tremendous amount of people out there that we've done deals with that have done major things in this
Right.
business. So
That's amazing.
it's always a good feeling.
And are there any groups that you can kind of recommend to young professionals? Networking groups?
Just try to go to everything.
Okay.
There's so much stuff out there now with social media getting big, like LinkedIn, especially. Look, if I didn't, wife and kids, I could be going out 4 nights a week networking.
Yeah.
Right. Sure. Or I didn't have, if I was not at this stage of my career, I was younger, you could be going to so many things, meeting so many people. And that's what I try to instill in the guys, at least go to 1-2 things a week, build your own network.
Right.
Because some of these things, you'll have these relationships for 20 years. Some you won't, but you just keep
Better
going.
take that shot. Yeah.
Exactly.
For sure. And David, I have my final question to wrap it up. What advice would you give your 22-year-old self about life, business, and relationships?
It goes back to the relationships. Value relationships.
Okay.
Don't go for every last dollar. I think that's like more of like young person mentality. Something like the early 20s. Like this is not. Don't make it like the last deal you're going to do with that person. Think of it as a growth perspective. But when you have nothing, and you think like that's going to be the last deal you ever do.
Yeah.
Sometimes the short-sighted mentality. That it's really much
Better to think long-term.
longer game. Like I said, now most of my investors are repeats. Sellers, if they own more than one property, don't sign the contract and then beat them down on the price and then don't think they have something else to sell you.
Yeah.
Build the relationship with them because you don't know what they're going to say about you. But that was something, that I would say back then in the 20s or the other business, just like it's not your last deal.
Right.
Let's put it that way.
So as a young person, it's kind of good to put the profit aside and think more about the person and the relationship that you're building.
Exactly. Like now when I bring in so many different partners and things and share and employees and give them a piece of the business, this and that, as opposed to, thinking that this is the end or this is the last deal, and try to really build those relationships.
Understood.
More.
Okay, great. David, this has been super valuable. I really appreciate you doing this again. And there's so much value that young professionals watching this can gain and apply to their careers moving forward. Thanks again.
Welcome.
Great.